Israel versus Iran, how war in the Middle East could crash the global economy. You probably opened this video because you've seen the headlines, missiles flying, threats from Iran, and Israel striking back. But maybe like most people, you thought, this has been going on for decades, right? Why is everyone suddenly acting like the world's ending? Well, this time's different. And here's why you should have your full attention. Because of this conflict, it's not just a political or military issue anymore. It's now a direct threat to the global economy by shaking oil prices, disrupting trade, crashing markets, and pushing inflation right back into the headlines. This isn't just about two countries with a long history of rivalry. This is about how your next gas bill might go up, why your investments could take a hit, why your grocery store might feel more expensive. It's about how one regional conflict could ripple out and trigger economic shockwaves across the entire planet. So, if you want to understand what's really happening behind the headlines, and more importantly, how it affects you, your money, and your future, then stay with me, because this isn't just another war story. It's an economic time bomb. For decades, the Middle East has been a flashpoint for conflict, but this latest escalation between Israel and Iran has hit a level that feels dangerously close to boiling over. What we're witnessing right now is a world war. We've just come out of a pandemic. Inflation has been eating into people's savings for over 2 years. Central banks are stuck between raising interest rates and trying to avoid recession. Now, throw a regional war into that mix, one that threatens global oil supplies, critical trade routes, and investor confidence, and you've got the perfect recipe for another economic crisis. This isn't just theoretical. Every time Israel responds to a strike from Iranian proxies, or when Iran threatens to retaliate directly, oil and stock markets react instantly. Currencies in emerging markets fall. It's not just news, it's affecting real money. The truth is, this conflict has the potential to go far beyond the borders of Israel or Iran. And if it does, the economic fallout could be massive, bigger than anything we've seen in recent years. Let's back up for a moment and talk about why this is happening now. Because this isn't just a random flare-up. The tension between Israel and Iran has been building for decades, but it's accelerated dramatically in the last few years. Iran sees itself as the protector of Shia Islam and the dominant power in the region. It has built up influence through militias, proxy groups, and political alliances stretching from Lebanon to Syria and Iraq to Yemen. Its support for Hezbollah in Lebanon and Hamas in Gaza puts it in direct opposition to Israel's security interests. And its nuclear program? That's the red line. Israel has made it very clear, a nuclear-armed Iran is unacceptable.
On the other side, Israel sees Iran as an existential threat. Not just because of its nuclear ambitions, but because of the rockets pointed at it from every direction. In Gaza, in Lebanon, and in Syria. All with ties back to Tehran. Israel has responded by launching targeted strikes, mostly in Syria, against Iranian weapons depots, military posts, and shipments of advanced weapons to Hezbollah. But lately, those strikes have become more frequent, more intense, and more open. And then came the turning point. Iran's direct involvement in recent missile attacks, not through proxies, but through actual Iranian military hardware. That marked a major shift. It turned what was once a shadow war into a direct conflict.
Now let's talk about oil, because this is where things start to affect you directly. You've probably noticed fuel prices inching up lately. That's not a coincidence. About 20% of the world's oil supply passes through a narrow body of water called the Strait of Hormuz. It's a choke point, just 21 miles wide at its narrowest, and it sits right between Iran and the Gulf states like Saudi Arabia and the UAE. If Iran were to shut down or disrupt traffic through that waterway, even temporarily, global oil prices would spike overnight. Prices could rise to $100 a barrel or more, depending on how bad it gets. It has an impact on everything. Higher gas prices, higher food transportation costs, higher airfare, even things you wouldn't expect like packaging, plastics, and fertilizers all get more expensive. Here's the scary part. Central banks around the world, from the US Federal Reserve to the European Central Bank, have spent the last couple of years raising interest rates to get inflation under control. So now imagine what happens if oil prices suddenly rise due to conflict. Inflation will happen again. Consumers pull back, interest rates stay higher for longer, businesses delay hiring or investing, and countries already dealing with debt problems, especially in Africa, Latin America, or Southeast Asia, face even bigger challenges as borrowing gets more expensive. Now let's talk about Wall Street. The one thing investors can't stand is uncertainty. They don't even need a war to start panicking. Just the threat of war is enough. When the headlines get scary, investors do what they always do: pull their money out of risky assets and rush into safe havens. That means government bonds, gold, the US dollar, and more recently, even cryptocurrencies. Stock markets fall, especially in countries that rely on oil imports or global trade. And let's not forget, Israel is not just a military power, it's a major tech hub. Companies like Intel, Microsoft, Apple, and Google all have research facilities in Israel. If the conflict disrupts daily life there, or worse, causes foreign workers and investors to leave, the tech sector could take a serious hit. That affects Silicon Valley, that affects NASDAQ, that affects innovation. Even countries far from the Middle East feel it. If you're invested in global mutual funds, ETFs, or even just following the S&P 500, what happens in Tel Aviv can shake your portfolio. Now here's where things go from economic to geopolitical. Because this conflict isn't just about Israel and Iran, it's also about the United States, China, and Russia. The three biggest global players all circling this situation from different angles. The US has historically backed Israel with military and financial support. If Iran continues to escalate, Washington might step in more directly with weapons, troops, or even airstrikes. Russia, meanwhile, has grown closer to Iran. They have cooperated in Syria. They've traded drones. Russia benefits when oil prices are high, especially as it tries to fund its war in Ukraine. So from Moscow's perspective, Middle East instability can be profitable, as long as it doesn't get too close to home. Then there's China, the biggest importer of Middle Eastern oil. China doesn't want conflict. It wants stability. But at the same time, it's been trying to play peacemaker in the region, building closer ties with both Iran and Saudi Arabia. If war breaks out, China's supply chain and its economy could take a major hit. And when China slows down, the rest of the world feels it. So what we're seeing isn't just a local war. It's the early stages of what could become a proxy battleground, with major powers backing different sides, using economic tools, technology, and influence instead of direct military force. That's even more dangerous because it makes the conflict harder to end. If you're thinking this all sounds familiar, you're not wrong. We've seen this play out before, and it never ends well for the global economy. 1973, the Yom Kippur War. 1990, the Iraq-Kuwait War. And 2006, the Israel-Hezbollah conflict. Every single time the Middle East explodes, the world economy catches fire. The only question is how bad the burns will be. So now you might be asking, what can I do? I'm not a politician. I'm not an oil executive. I can't stop a war. And that's true. But what you can do is understand how these events connect to your everyday life and prepare. If you invest, watch energy markets closely. Pay attention to gold, oil, and defense stocks. If you're budgeting, expect higher fuel prices in the coming months, maybe even higher food costs. If you're running a business, think about your supply chain and your exposure to international markets. Most importantly, don't ignore what's happening just because it feels far away. In a globalized world, distance doesn't protect you. Awareness does. Thanks for watching. Stay informed, stay sharp, and as always, follow the money.